All right, it's 3:04, and I'd like to call to order the meeting of the Finance-Auditing Committee.
3:04.
Well, that was a good start, wasn't it? That case will probably finish.
It's 3:04 somewhere.
Yes, 3:04 someplace. All right, let's start over. 3:04. And I would like to call to order the meeting of the Finance and Auditing Committee of Thursday, February 26, 2026. Before we begin, please note that this meeting is being recorded. Welcome to everyone joining us here in person, as well as those listening in on the phone. If you'd like to provide public comment at today's meeting, and if you have not done so already, please let Thomas in the back of the room or Justine on the call-in line know what items you would like to speak on today. Madam Secretary, would you please begin by calling the roll?
Thank you. Starting with Director Cochran.
Here.
Devlin.
Here.
Giudice.
Here.
Hernandez.
Here.
Maston.
Here.
Rodoni.
Here.
Vice Chair Parr.
Present.
Chair Rabb is absent, and President Hill.
Here.
Thank you. You have a quorum, but you are also a committee of the whole. Also in the room, we have Directors Garber-Reno and Hardiman rounding out that committee of the whole.
Oh, thank you. Please follow along by referring to the page numbers located on the bottom right-hand corner of your meeting packet. We'll begin with agenda item number 3, which is the ratification of previous actions by the Auditor Controller. Monique Spike from PFM is here with us today to go over the investment report, which begins on page 9. Monique, please take us through your report.
Good morning. Thank you for having me. So I'm going to...
I'm anxious to hear what you have to say.
Thank you. I'm going to start on page 10 and 11 of the packet and, just start with sort of the big picture news, which is that the economy has been fairly resilient in the face of a lot of stressors. On page 11 of the packet, and I'm going to start at 11 and jump back to 10, if you could bear with me. I think we saw that the labor market data has been much better than anticipated, particularly in the last month. The unemployment rate stood at 4.3% as of the last economic report for January 2026. And we actually saw a fairly large increase in the number of non-farm payrolls at 130K. Now, that's notable because the Fed's policy with the rate cuts last year, there's about 3 rate cuts in 2025, 0.75 total, has been to support the economic market. If you want to think about it a couple of ways, higher interest rates slow down inflation, lower interest rates tend to spur growth. Now, what we saw on jumping back to page 10 of the packet is that, interest rates held fairly steady, but we have seen some positive movements in interest rates intra-month. Now, the big news for the last couple of weeks has been the Supreme Court decision on tariffs. And a couple things. One, tariffs in general, there was a lot of concern that they would impact inflation and cause a lot of price pressure. The data has not borne that out. We have seen from the Fed's beige books that inflationary costs have been hitting production costs and manufacturing, but the way individual entities have been passing those costs on to consumers has varied. And so we have not seen the widespread high price pressure. However, the Supreme Court did strike down the administration's ability to impose those tariffs. And so President Trump had been imposing a lot of the reciprocal tariffs and the, country by country tariffs under the, let me get this right, International Emergency Economic Powers Act. And the Supreme Court essentially said that he did not have the ability to do so. And so all of those tariffs were essentially struck down. And those, again, were some of the reciprocal tariffs, some of the country-by-country tariffs, particularly some of the tariffs with Canada and Mexico. It calls into question some of the trade agreements with Japan, South Korea, etc. But there are some tariffs which were not impacted, and those tariffs include some of the things that were industry-specific, like steel, for example. Now, what the administration is doing with the tariffs, because the president still believes it's an important part of his agenda, is they are now imposing tariffs under the 1974 Trade Act. And what they're doing is imposing a 15% tariff that will hold steady for 150 days because that's all the authorization that Act gives the president. And it's anticipated that over those 150 days, the administration is going to explore ways to make some of those tariffs more permanent, possibly through legislative action with Congress. So what does that mean? That means that we should not expect a reduction in prices because the president has found another mechanism by which to impose the tariffs. It also means that there's still some uncertainty in the market. If you turn to page 12 of the packet, consumer price index or inflation data has also sort of cooled down a little bit, is a little more stable. We've seen some price pressure, but again, we're not expecting prices to go down because those tariff rates are essentially still in place for the foreseeable future, and we do expect the government to find a way to make them permanent based on what the president has communicated. Still no guidance on whether funds are going to be returned that were imposed through tariffs. And I think, again, we've heard pretty plainly from the president that they will tie us, country, producers, whoever, up in litigation before they look to find a way to give that money back. So just food for thought there. Those are the big picture economic realities that are going on in the market. What we heard from the Fed as an outcome of all of this is that their current direction with interest rates is not guaranteed. Because there's still some uncertainty about tariffs and inflation, they're leaving some room on the table to keep interest rates high and to even some members have said increase interest rates. They're also communicating that despite the fact that the labor market seems to be improving, they don't want to take away the ability for them to continue lowering interest rates this year. And so I think, if you add up we could potentially increase or we could still lower it, we're sort of in a neutral state for the expectation of interest rates for 2026. So that brings me to what we're continuing to do with the district's portfolio. And I'm going to turn to page 17 of your packet just to capture the portfolio diversification. I've communicated the last couple meetings I've sat and spoken with this board that, our strategy has been consistency combined with prudence. We have been looking to make sure that your portfolio is aligned with potential cash flow needs. That insulates us from the interest rate volatility in the market. And we've continued to find opportunities to add attractive securities when the opportunity presents themselves. With that said, your portfolio is very diversified. We're really happy with the income metrics on the portfolio. The portfolio yield is about 4.13%. So you're going to continue to have really good income for the next few quarters. And we continue to have deep discussions with your staff and the portfolio management team to ensure that your investments are optimized while keeping our eye on risk mitigation. So I'll pause there for questions.
No questions at all? All right. Then this concludes the discussion on item number 3. Thank you, Monique. Before we take our vote, is there anyone from the public wishing to speak on this item?
We have no speakers on this item.
Thank you. May I have a motion on item number 3?
So moved. Second.
Thank you. Madam Secretary, please conduct a roll call vote.
Thank you. Starting with Director Cochran.
Yes.
Devlin.
Aye.
Garbarino.
Aye.
Giudice.
Yes.
Hernandez.
Aye.
Maston.
Aye.
Moulton Peters is absent. Parr.
Aye.
Parrish is absent. Rodoni.
Aye.
Snyder is absent. Clear is absent. Second Vice President Hardeman.
Aye.
First Vice President Rabin is absent. And President Gill.
Aye.
Thank you. That is unanimous with 10.
Thank you. We have nothing under items 4 and 5, so we will continue to item 6, which is to approve the renewal of the marine insurance program. The staff report begins on page 27, and Kelly Vitale is here to present the report. Good morning, Kelly. Please begin your report.
Good morning. So the request in front of you is to review and approve the marine insurance renewal, which we do each year. But this year, like every year, the insurance market is testy. The marine insurance is normally pretty it doesn't usually, we don't see a big increase, usually anywhere from 5 to 7%. This year, we were anticipating a much higher increase, particularly because we have a large loss that's pending that we're working to resolve, and I will bring it to the group at another time. And it renews under our protection and indemnity. So that is where when somebody is injured at work under the Jones Act federal program. And what we were able to do was we were able to minimize that loss. And we have a very good relationship with the Steamship Club, as I've told you all on previous occasions. And they really want to keep our business. They're very invested in the new vessels that we have coming. And so instead of what they first sent over was a 17.5% increase, we got the increase down to 7.5%. And you should know that all their other partners, which are vast, received an 8% increase. So very pleased. I mean, again, I'm not happy to spend the district's money, but this is something we have to have. And so any decrease in reduction is a win for me, as far as I can tell. And our brokers work so hard to maintain those relationships. And Steamship Club was just here in October. And actually, when I had a discussion with the group from London about 2 weeks ago, they actually mentioned how impressed they were with the ferry division and what Mike is doing over there and just the team overall. They were very excited to ride the ferry from Embarcadero over to Larkspur. They just think that Mike and the team are doing a great job, and they're very proactive. And they actually mentioned that again in the most recent conversation. So they did that when they came out, but then they brought it again. So I think there's a lot to be said about relationship building with our carriers, and they are they cover a large market. So
You should stop for just a second and tell Mike to lift his head, and we'll tell him
yes.
thank you in person.
Yeah, I have to credit the team at Ferry. It's not just me, but yeah, we have a great team. Thanks.
With great leadership.
It looked like Mike back there.
Okay, so I digress. I thought that information might be helpful for you all to have a little bit of an understanding of what we're doing over here behind the scenes, managing the relationships that we have to. So, each year we usually renew 4 coverages. 5 of them always bind again, but the 5th one is our pollution, and that is a 3-year term. Every time we purchase pollution, it's a 3-year term for vessels. But the other 4 renew every year. And so the first one is the protection and indemnity. We talked a little bit about that. That again is with the Steamship Mutual Protection and Indemnity Club, another 1-year term. They did tell me that this will be the last year that an increase will be considered because of that loss. So that's also good news. So they invited me to a conference in June. They said if I could get there, they would cover the lodging and this and that. So I intend to go to get our rates at 3%. So that's kind of the hope, is that they're having a club. They invited Mike and I to come. It's a conference about vessels and safety and risk management. And so I told the broker that I think that we should both be there because we should look forward to even lesser increases, right? And so that increase I did also increase our deductible on that. And so what you should know with the protection and indemnity, we pay up to $55,000 on each claim, we pay $350,000 total aggregate, but we pay $55,000 for each claim. So this loss that we have that we're working to resolve right now is one of only the second losses in the time that I've been here that's ever exceeded that $350,000 occurrence. So I thought it would be a good idea for us this year to further increase that deductible for this 1-year period, since we are doing so well with our safety measurements, and because we are looking at resolving that loss, that large loss that we have. And so I felt that it was a better risk for us to take with a little bit higher deductible that we've only met twice in 7 years, versus keeping it at the $350,000, and then we would have had a 10% increase. So I opted did for the 7.5% increase and increased our deductible a little bit, which I'm optimistic that we will not approach that with any other claims. So that coverage premium is $581,000. And what I do like, you can always review at the end, if you like, is the comparison for the prior years. But just to give you a quick idea, last year, the premium for our P&Is, what they call protection and indemnity, was $502,731. And this year it's $581,000. I'm sorry, $540,000 was last year. And then this year is $581,000. So considering the loss that we have, that's a really nominal. Again, I know that it's money, but it's nominal considering everything that we have paying out. The next coverage that we are renewing is what's called hull and machinery, and that covers everything just like it sounds like it would. That increase also has a deductible of up to $200,000. That's not changed because we haven't had to use that coverage in over 5 years. We haven't had a claim for that particular coverage in over 5 years. So that premium will remain fairly steady. Yeah, it's actually at the same exact amount, $255,740,000. The third item that we're going to renew is the general liability. And again, another 1-year term, another deductible of $10,000. And that one is also staying at about real close, just about $1,000 more than what we paid last year. And then our excess marine liability, that's with a couple of groups that they each have towers in that coverage. That also has a limit of up to $50 million, and it is a $10,000 self-insured retention. We pay the first 10. That is $132,000. And it's broken up on the table by the carriers that we have, because there are 3 different carriers. And so that renewal is about the same as that was last year as well. And then if you'd like, I can give you another overview of what those coverages cover, or if you feel comfortable from years prior, just let me know if you'd like me to give you more information about the type of coverage we're binding. Do you have questions about that?
I would think it would be interesting to hear briefly what type of coverage.
Okay. So protection and indemnity, as I mentioned before, that covers all operations of the vessel for what we would traditionally think of as workers' comp, but they're Jones Act and collisions. And this coverage, protection and indemnity, now is different and distinct from the general liability and then from the excess liability. So think protection and indemnity covers all maritime liability risks for people. The next coverage is hull and machinery, and just like it sounds, that covers vessel or fleet physical damage caused by peril or other things that happen, if we hit a pylon. Sometimes we can also, if we have, depending on how old the vessel is, if we have an issue with, say, an engine, and I'm not mechanical by any means, but let's say the engine blows and it's going to be more than what our deductible would be, we could ask to file a claim for damage or warranty, if you will, for an engine or but again, it's complicated because of the age and miles on the vessels. So that also could be coverage in that particular area. Now, under the general liability, this is bodily injury or property damage. And this is when we're loading and unloading and people, because that's what we move. So when they're getting on the vessel, when they're getting off the vessel, those injuries do not go under protection and indemnity. Those go under the general liability. And that's the coverage where we have I think that's the $10,000. The $10,000 self-insured. And then the excess marine liability, so that's the tower coverage that I told you about. And that's where we have groups that cover. So this coverage picks up $1 million after the $1 million coverage ends on our protection and indemnity. Then the excess picks up after that. And so there's limited partners in that particular insurance area, but we have, again, built some relationship with folks. And so a lot of those prices have been able to be pretty stable because of those relationships that we've built.
And so this again picks up where the marine general liability ends. So if somebody trips and falls when they're leaving the vessel and they file a claim and their claim is settled for 1.5 million, the first million less the 10,000 deductible goes under the general liability, and then the 500,000 above that comes from the excess. Does that make sense? Okay. And then the pollution is self-explanatory, except sometimes it can be complicated, but it's any vessel pollution, right? So, if there's a spill, a leak, anything to that nature, it covers other things as well, but that's always the first thing that always comes to mind. So oil, gas, leaks like that. And we have mechanisms in place to mitigate that, but that coverage is limited up to $5 million per act. And it's also required there's a agency that we have to send every year proof of this coverage and proof of our economic stability in case of that through the California wildlife. And so we have to have this coverage and we have to have it at that amount. And again, so I'll tell you what we're looking for is authority to bind the coverage of $1,012,878, a 5.1% increase over last year's term for the marine policies that I just spoke of. And if there's any questions, I'm happy to take them.
Thank you, Kelly. Are there any questions or comments from the directors? Director Gabriino?
I would just like to comment. That was so comprehensive. Thank you very much. We also have similar Webb's insurance, and so I sincerely appreciate the clarity of your presentation. And it's seemingly very inexpensive. So thank you.
Relatively speaking, right?
Relatively speaking. So thank you for that negotiation.
Remember that when I come back in June to bind all the other coverages.
Okay, will do.
Thank you for the comment. I appreciate it.
My comment was going to be almost like Patty's. Thank you to both you and the ferry division. Unless you've been through it, you don't realize how careful and comprehensive you have to be to come up with a recommendation. And we just get the end fate. So thank you very much. Director Hernandez.
Thank you, Madam Chair. Sorry for the late comment, but Patty and I have been chatting with everything that you reported. We look at each other, eyes open, and we say, wow, so gee, how'd you do that? So yes, kudos to you and the folks that you're working with for your negotiating skills and your ability to see all the nuances of these different types of insurance. But I think it also maybe reflects a little bit on the operations of the district, the safety mechanisms we have in place, the policy and the procedures that we engage that reduces the risk that makes us an attractive client for some of these folks that we have to work with. So kudos there as well. Thank you.
Okay. I think that's why it was important to let you know about their tour in October and the feedback that they've given on multiple occasions just about how impressed they were. And when they first sent the 17.5% increase, I told the broker, please let them know that we'll look at the other club. I don't want to leave steamship, but they have to know that I'm not just a sucker. And so, he did. He said they said they'd look, and they have built a relationship with us. And they were so impressed when they came in October and got to tour, and the ride on the ship is all that the vessel's all they've talked about. And so I think that really made a difference. And they also did not have some information that had come in about the loss that we were anticipating. And so that has shifted some liability. And so I think I had them, the underwriter had not spoken to the vice president of claims that I've been working with. So I had them have a discussion, and then they came back with either 10% at the same deductible or 7.5% increasing deductible. So I think you're right. It's because of what Mike's doing, because of the relationship we're building, and they want to be our partner.
It's the best place.
Thank you. Thank you. I see someone else want to comment. Right. This concludes the discussion on item number 6. Is there anyone from the public wishing to comment on this item?
We have no speakers in the room or online for this item.
All right. Thank you. May I have a motion for agenda item number 6? Thank you. May I have a second? Thank you. Madam Secretary, would you please call the roll?
Thank you. For first and second on item number 6, starting with Director Cochran.
Aye.
Devlin.
Aye.
Garbarino,
Aye.
Yudichang,
Yes.
Hernandez. Maston.
Aye.
Moulton Peters is absent. Parr.
Yes.
Parrish is absent. Bernoni.
Aye.
Snyder is absent. Lear is absent. Second Vice President Hardeman.
Aye.
First Vice President Rabbit is absent. And President Hill. Thank you. That's 10 ayes. Thank you.
All right. Thank you. Thank you, Kelly.
Thank you.
We'll continue on tonight, item number 7, which is the status report of the fiscal year 25-26 budget. The staff report begins on page 33, and Director of Budget Analysis Grant Martinez is lucky enough to be able to get here and present this report, which is not the least bit complicated. Grant, please begin your report.
All right, thank you. Thank you, directors, for having me. So this report will look very familiar for the last 7 months. So we're starting with the $58 million deficit that we started the fiscal year's budget with, receiving the one-time COVID relief funding, the last tranche that we have currently identified of it, for $34 million, which brings us down to a baseline deficit of 23.7. So throughout the course of these 7 months, we have been through our overperforming on our revenues versus what we projected and controlling costs. So that combination of the two of those has led us to right now through the first 7 months be showing a $5 million surplus against the budget.
If I may, what that means is we still had a huge deficit. One-time COVID relief funds offset most of it. And so that $5 million just means that we spent a little bit less of that one-time COVID relief money than anticipated.
Thank you. Are there any questions for Grant? That concludes our discussion on this item. Is there anyone from the public wishing to speak on item 7?
No speakers for this item.
Thank you. There's no action associated with item number 7. We'll move on to item number 8, which is the monthly review of the Golden Gate Bridge traffic tolls and bus and ferry transit patronage fares, as well as item 9A, monthly statement of revenue and expenses, and 9B, monthly statement of capital programs and expenditures. Grant, please begin your report on this item.
All right, so I'll start with the first one there, number 8, which I'll be referencing page 45 at first. So this is our traffic and ridership detail for through the first 7 months, and year to date we are up in all 3 modes. So bridge traffic being up a little over 1%, bus about 10%, and ferry about 5%. So we are entering the months of the year where during winter that those ridership numbers and traffic might tend to dip, but overall, cumulatively for the year, we're up overall. And that same goes for revenue. And that it's we're currently in the 2nd year of our toll increase plan and the 3rd of our ridership or our fare plan for bus and ferry.
Thank you.
So
go ahead.
The only other comment on this report that I have is we made a slight format change to the charts. That would be on page 47 and 48, where we took out some of the middle years between the pre-pandemic numbers and current to show what it was prior to COVID in 2019, the last completed calendar year, and then what it's going to be the current calendar year.
Thank you. That was helpful. All right. Are there any questions on item 8, 9A, or 9B from your directors? Just on 8.
Yes. Excuse me. I know that while the bridge helps to make the world go round, it's heartening to see what the buses have done, right? Because they have been lagging behind in recovery, seemingly.
Yeah, and the numbers are somewhat deceptive because they're more behind than the numbers reflect. Because before the pandemic, we did not pick up and drop off customers in San Francisco. When the pandemic hit, SFMTA had to cut service drastically. They asked that we pick up and drop off. We started doing that. Then we made that permanent. This board went through a formal public process. And today, about 35% of our bus riders are local within San Francisco. And so the bus ridership numbers that you see don't reflect people crossing the bridge. It reflects people that get on and off our bus. And so we have a large local ridership contingent in San Francisco. We're very appreciative of those folks because they pay a Clipper fare of $4.60 every time they hop on one of our buses to go from the marina to downtown. but they're not crossing the bridge. But the bus is coming from Mill Valley or San Rafael or Santa Rosa anyway, and it has capacity. And so it was very prudent of us to fill those empty seats and have some folks standing on those buses. So it's worked out well. But in terms of the ridership, the better way to look at it is total corridor. During the morning commute, bridge traffic is down 25% from 5 a.m. to 9 a.m. on weekdays. And so that tells you right there, that people are still not commuting. And then in terms of the commute, has bounced back, somewhat, but it still has a long ways to go. We used to do 42 trips a day at Larkspur. We're only up to 32 trips a day. Then on the bus side, the best barometer is the route that goes from Mill Valley to the financial district. Before the pandemic, we did 25 trips every morning. Today we do 7. And the only reason we're doing 7 is because we're also picking up and dropping off in San Francisco. So, recreational travel is mostly back. Weekend travel is mostly back. People want to go to a ball game. They want to go to a concert. But within our service area, we have a lot of workers that can work remotely. And, so, that's one of the challenges we have. The most important thing to remember is our success is tied to the success of downtown San Francisco. And as it bounces back, we will bounce back. The office vacancy rate is slowly improving in downtown San Francisco. That having been said, as we speak, 35% of all office space downtown does not have a tenant. And so, as that space fills up and as employers and employees navigate the remote work, construct, we'll learn more. So we haven't come out the other side yet. We're kind of in the middle of this transitory phase. And what really is most important is what happens to all that vacant space downtown San Francisco. And we're not the only ones that are interested in that. I'm sure a lot of people around the table are interested in that for other reasons too. But I just wanted to get that out there because sometimes if someone may not realize that that's really the issue. The issue is downtown San Francisco. And so, our fate is tied to that. So anything we can do to assist in that, Phoenix rising up again is in our best interest.
Thank you. I think that outlines our ability to be nimble and flexible. So much has changed during COVID, including, I thought you said, so much of downtown is out in a tenant, but it's out of the tenant. So I'm glad I grabbed that one. Thanks.
President Hill.
Yeah. The people who have been staying in the city, are they tourists?
We do carry tourists now. So we have 2 components. In the morning, in the evening, we carry a tremendous number of commuters in San Francisco that are going to the financial district on our regional routes and as well as our commute routes, especially the commute routes. We had a bus, I see data every 2 weeks in arrears on bus. We had one bus that had 86 passengers on it in San Francisco. So, so we have some productive trips. But the tourists come later in the day. All of our buses now pick up and drop off, so we do carry tourists to the bridge. The one good part of Clipper 2.0 is that now they can tap a credit card to get on, where before they had to pay cash or have this Clipper thing that they're in from out of town, they didn't know what it was. And so the one part of Clipper 2.0 that's really helping us is the ability for tourists to tap a credit card to ride our buses and ferries.
Yeah, I do ride the bus to come to the office, and I do see a lot of people getting on in San Francisco at Salesforce and getting off at Richardson before the bridge. And it has really helped the drivers with Clipper 2.0 by being able to direct them to use credit cards to pay rather than get frustrated and then just let somebody get on so we can continue the service.
Second comment, you notice that Van Ness and Market, and the third highest building in the city is going to, and that's the closest to you anyway. So that's going to be bringing a lot of people with transit. There's practically no parking. It's over 1,000 feet, I think it is.
We carry a lot of customers in the Van Ness corridor also, as well as the financial district corridor. So people have discovered our bus. The Muni Fast Pass does not work on our bus. If you choose to ride Golden Gate, it is an express trip. It's much faster from the marina downtown, so people are choosing to pay a little extra to ride our bus. And we're very, very appreciative of those customers because it's, the numbers you see would look much worse barring that.
You go.
Thank you. Any other comments? Are there any comments from the public on items 8, 9A, or 9B?
We have no speakers on 8, 9A, or 9B.
All right. Thank you. There are no actions required for these items. Okay. Right. Before we continue to item 10 on the agenda, which is closed session, if there are no objections, I'd like to accommodate the public and take item 11, public comment now instead of after closed session. Are there any objections to taking public comment now? Hearing none, Madam Secretary, is there anyone from the public wishing to address this committee under item 11, public comment?
We have no speakers in the room, but Justine would like an opportunity. She has some callers that joined during finance, so she'd like to poll one more time. Justine, why don't you take it away and do your polling?
Thank you. Yes, if you've joined and you'd like to speak at the meeting this morning, please press ** to unmute yourself and give me your name. Again, if you'd like to speak under public comment, please press ** to unmute yourself and give me your name. I'm going to ask one more time. If you'd like to speak under public comment this morning, please press ** to unmute yourself and give me your name. Okay, I'm not hearing anyone this morning. Thank you.
All right, thank you. We'll be placing the public on hold for the duration of our closed session item and return after closed session to adjourn the meeting. Attorney Kim Manolius will take us into closed session. Kim, turn things over to you.
Thank you, Chair Parr. At this time, the committee will go into closed session for a conference with legal counsel regarding existing litigation or Code Section 54956.9A for the matter that's listed on the agenda, James McCormick versus Golden Gate Bridge Highway Transportation.
Thank you for your patience, everybody, while we're in closed session this morning. If you were unable to mute yourself and you do want to make public comment, please let me know. Okay, I'm not hearing anyone. Thank you. Thank you for your continued patience while we're in closed session, everybody.
I have to say this, with that we have no other close, she writes it and then doesn't let me say it. Other close session reports. So Madam Secretary, please take us back into open session.
We're in open session.
Thank you. Now we're in open session. Thank you. Kim, would you please provide your closed session report?
Of course. Finance-Auditing Committee met in closed
Who's
session
on first?
regarding existing litigation under Government Code 94629A. The reforming matter is listed on the agenda and providing its lawyer with appropriate advice on how to handle the claim. Excuse me.
Thank you very much. With that, may I have a motion for adjournment?
Second.
Any opposition? We'll see you all tomorrow. Meeting adjourned.